8:30, 2:42 p.m. and we start with the S&P 500. So what we have right here, we have like a nice consolidation in this area above the 200-day exponential moving average and also above the 78% of this Fibonacci retracement. We start this run on this S&P from this ABC structure. And remember guys, this is an ABC structure that I want you guys to learn and pay attention and see how this market structure work very well. So we have the drop from the market, A, B, and C, and from C that was created above the 61%, starting to run up, and the market right now is consolidating above the 200-day exponential moving average. Market look like it's going to go outside to break this point. So let's see, next week we have a lot of economic report coming in, plus the non-farm payroll. So it's coming a big week. The following week is going to be big. So the next is the Nasdaq. The Nasdaq doing the same thing. We have the A, B, C after this fall from the higher the market is starting to run up and consolidating above the 200-day exponential moving average. You can see it's above the 78% of this Fibonacci retracement, meaning the market is super strong and it's consolidating right here above this number. Let's see what happens next week. I just want to show you guys, if the market stay above the 200-day exponential moving average, we are very bullish. So meaning the market trying to break this high. So this is a Nasdaq, this is technology, and a lot of the technology company doing very good, and we can see that reflection in the Nasdaq. So let's see what happens next week with all this economic report. But the Nasdaq look like it is consolidating above the 78% of this Fibonacci retracement on the level 21,000. So we look very strong with the Nasdaq. The next one is the Daoyuan. Same thing. The only thing that I wanted to show you guys here is the Daoyuan is under the 200-day exponential moving average, also under the 100-day exponential moving average. But we are above 78% of this run. We are still on the very positive side. We have the market structure ABC correction right here. You can see we have this correction, this market structure showing that the market is very strong. This is a nice consolidation above the 78%, 41, 55, 64. Market showing that is going to hit to the outside. But remember, the Daoyuan is the only one out of these three index under the 200-day exponential moving average. So we have to pay our attention to that, but it's very close to that line. So it could break on Monday, or it could break before the closing of the market today. So the next is going to be Tesla. We have Tesla, we are retracement today. It's no big deal. It's all the drama with the tariff and everything happened with China. That's my belief. That's why the market is contracting today. It's a retracement. This retracement is nothing bad. It's something very healthy. We are around the 61% right now with this bar. We are under, but we are way above the any exponential moving average. You can see right here the 200, 300. This is the 50. The way this will be look better is the 50 go all the way here, and now we have that alignment, that 50 and 100 and 200 alignment in that way. So we have the strong structure right here, the ABC correction, and the market spike up like we've been talking all this week. Right now it's a consolidation area. Let's see what happens next week with all the news coming up. So remember, Tesla, we're looking for this number right here. We have this resistance, which is 439, coming from this high when he created this ABC on the top. So that's one of the resistance that we have to be looking at. And the other one is the 78%, which is that price right here, $413. So let's pay attention around that area. So let's see what happens next week. But Tesla look very strong to the upside. Next we're going to do is the quantum company. So let's go there. So the first one is RGTI. Also, this retracement, the 200-day exponential moving average down here. This is the 100, and this is the 50%, which is $11. So this retracement is a healthy retracement, very good. We can look for some rebound from between here and here around this exponential 100-day exponential moving average. So if you guys are not on the market, you should wait for the structure around this number right here and get in the market. If you are on the market, keep your stop loss down here and see what happens. If the market kicking you out, wait for the structure. Once the structure formation is on, like this ABC right here, you can get back in the market. But to secure you profit if you already got some profit in there. QUBT doing almost the same thing. You're going to see all the quantum doing something similar. You see it's a 38%. We are far away from the 50, so it reject from the 50. So right now it's down here. So we need something above 50%. That's why you can see the bullish coming in. Also, we have the 200-day exponential moving average down here. The ABC was built above that line. We are in very good shape right here. So waiting for the next week. All this retracement today, it could be because of that news, or also because this company is starting to go up. So any retracement like that is very healthy. QSI was one of the new ones. It's still above the 200-day exponential moving average. This is a nice retracement. After that, you can see right here, it started. Let's go right here in an hourly chart. It hit the 100-day exponential moving average and it's starting to try to do the first reaction. Let's see if it do the follow through on Monday or later on the day, or coming down and go to the 200-day exponential moving average. If you are in this market, you should have the stop loss down here. If you move it here, you're good too. So just wait to see if the market kick you out. Same thing, like I always say, wait for the next structure formation and you move, and we move from there. The next one is QBTS. Doing the retracement too. You see the Fibonacci that I threw the other day right here. We break the 78. Right now we are between the 78% and 61. That's a super healthy, super bullish. Everything above 50%, we are still bullish. The 200-day exponential average is down here. We have the structure formation right here, the ABC double bottom above the 100-day exponential moving average. We're very good with QBTS, so nothing to worry about it for now. The next we have right here is IONQ doing also a retracement. You see this big bar right here is normal. The IONQ try to do a correction move. Probably is going to be looking for the trend line and rebound from the trend line. If you was kick out from here, you wait until the market rebound and create a structure around this area, which is above the 50% Fibonacci retracement. That will be a good entry for IONQ around $37. We are still very strong. We are way above this trend line, also above the 300-day exponential moving average, 50 and 200, and above the 50% Fibonacci retracement. So we are in very bullish position right here in our IONQ. The next one is BBAI, and they still looking very good. We have right here the ABC correction above the 200-day exponential moving average. Right now is consolidating above around the 100-day exponential moving average and also above the 23%. We need this company to go above 50%. Like that, we know that we are in a positive area and the bullish area of this Fibonacci retracement and this rundown. So nothing. This is a company that started a new run. We should be in the stop loss down here or down here under the 200-day exponential moving average. And guys, in this company, I want you guys to see the market structure strategy that I'm trying to teach you guys. Higher the market, going all the way down, ABC. This is a new run completely. Like I always tell you guys, nothing is 100%, but this strategy have a very high approve rate, like 90%. So A, B, and C. That's what you need to learn. Market structure. This is market mechanic. And from here, first move, that's the entry bar, retracement, consolidation, which is an accumulation. Now we are in the distribution time. So right here is your stop loss. After this spike above the 38%, you bring your stop loss here, and now you are on free trade. You are very protected, you are break even, and you let the market run. If you get in the market right now at this price, you also, that soon the market spike to outside, you also going to bring your stop loss from here to here. Now when the market move, you bring it to the next level, that will be your price entry, and like that you are complete protected. This is a good company to see the strategy and prove the strategy. Even if you are not doing it with real money, do it with paperwork, and you learn and see how this structure market mechanic work. Remember, ABC, double bottom, or ABC irregular. Irregular means the C break the low of the A and then starting to run up. We are above the 200-day exponential moving average, above the 50, and above and around the 100-day moving average. Very early run. So the next company we're going to go is RCTA. RCTA doing the same thing. We are very early right here. You see, in this case, RCTA just break the 200-day exponential moving average. So let's say that you went in this bar right here, and now you are negative. Your stop loss is down here. So at this point, you made the decision. You stay with the market, or you take that minimum loss and you wait until the next formation. Me personally, I'm going to wait because it don't have to break. It could be bumping around in this area until the market spike. But my stop loss is down here. My price was with this bar. My price entry was with this bar, and we just waiting to see what happened after that. Okay, if the market kick you out right here, you just let it be and wait for the next formation. Remember, we need to be above the 200-day exponential moving average within the A, B, C, and the price above the 200-day exponential moving average. Okay, so the next company will be Service. So right here we got the same. This is a new, like I explained to you guys the other day, this is a new run. So this will be A, and then market move, that will be B. Now it's creating C. Just wait for that C get done. C will be around here, respecting the low, so it doesn't break. It doesn't have to break the low. If it break the low, it have to close above that level. But wait for the entry, so C, B complete a bill, and from there moving up. Remember, A, B, and C. In this case, we're waiting for C. But the price is above the 200-day exponential moving average and also the 100-day. So one more time, the market come down from the high. You see the double top create right here, drop to the down, creating A, and now we have this first move, which is creating B, and we're waiting for C. That could be around here. That will be when we put the first entry. Once C is created, you have the first institutional bar. So the bar has to be bigger than the rest of the bar that you have around. So that will be your entry, and your stop loss will be down here. When the market move above the 200-day exponential moving average, you move your entry to stop loss where your entry was, and from there you're still moving up and up. You also have to put the Fibonacci retracement always to see where support and resistance are. So you just bring it right here, and we can see the 50% around this price right here. That price is $14.47, so it will be right here. So the market get close to that price and was rejecting from there. So that's something to pay attention to. So just wait for the C formation and the first bar, that will be the institutional bar to create your first order in this company. Next is Arch. Same thing, you have the ABC correction above a 200-day exponential moving average. The company is spike, and now is doing like a healthy retracement. We are above a 61%, very good. wait just for the market create the next reverse bar around this price right here. If you are not on the market, that will be your entry, and your stop loss will be anywhere down here. If the market continue to the downside, just wait for that ABC structure creation, so you can go down to an hourly chart and see what happened. You can see right here the market hit one of these Fibonacci and then starting to do the building a structure like this. That will be the ABC, and from there the market move. So intraday you can see in advance if something happened. Don't do it and with this type of company, don't do it with 2 or 15 minutes. Just go until an hour or 4 hours before that structure is created. And the next company and the last one will be CLSK. Let me just readjust the price right here. You see the same thing, the market went all the way down. So now we waiting, so that was B and we waiting for C, that it could be anywhere right here. So if let's say on Monday we got a new low and closing high, that will be C. Also, if we have a spike on Monday, that will be C. This area right here is the area that we're waiting for this C formation. So anywhere right here, you just need to wait for the entry bar. I've been working on Monday with this report too, and I let you know, guys, if I see something different. Okay, so this is all I got for this market report today. Hopefully you guys have an amazing weekend, and I see you guys on Monday.